Welcome everyone to our live streaming. I am Aditya Kumar Shah, your host for today. I am a live streaming analyst for today. So for those who don't know me, I have an experience of 7 to 8 years in financial market and in securities market where I have managed a portfolio worth over 150 crore and my techniques are based on fundamental analysis. So we are always talking about fundamental analysis, and now we are going to talk about each and everything about the operators, how they make positions, what is the cost of the entry, and for today we will look how to establish position at the bottom in a covert manner. So just be ready for it, each and everyone. So I welcome you again. I will be your guide throughout the series of this course. This series is designed to revive your investment accounts, turn losses into profits, and achieve sustained and stable gains. So are you ready for it? Do you want to achieve sustained and stable gains? Now for those who submitted yesterday assignments, just let me know who have submitted the yesterday assignment to our assistant. Please reply with one if you have submitted, right? So for those who have submitted, please reply with one. For those who haven't submitted the assignment, please reply to. I have received, just I was going through the numbers, I have received around 25 assignments yesterday. It's very great. Majority of you have done the very excellent job. Only few didn't submit it. I want to know the reason, guys. Why haven't you submitted the assignment? Please tell me the reasons. Weren't yesterday insights were enlightening? Weren't yesterday insights were helpful for you? Please let me know in the chat, guys. So now let's have a question for you. Haven't they overturned your previous misconception about stock trading? Haven't it? So the purpose of the assignment is to help you consolidate what you have learned. So just remember, the purpose of the assignment is to consolidate what you have learned throughout the session we have been talking about. This is how you can maximize your understanding from each lesson. Of course, I can lead you to financial success, but you need to understand my strategies. For you need to take the notes, you need to do the assignments, and then only I will be able to take you towards your financial success. But you need to understand my strategies first. Once again, please have your pen and paper ready to take notes. For those who are not taking pen and paper, they will be much behind than those who are taking pen and paper and making the notes with them. So whatever I am sharing to you, just make sure you are noting it down. So whenever you are trying to revise the concepts, you are getting the brief explanation of it through the notes which you are making out. Now, many a times it happened we forgot some concepts. We are not able to grasp the all of the concepts at once, right? So it's very important to keep it on a note. So whenever we come to whenever we forget anything, we can be able to grasp the essence, and through notes we will be able to be update ourselves. All right, once again, welcome to the live broadcast. Let's officially begin today's session. Now let's first review yesterday content, what we have talked about yesterday, right? So yesterday we talked about how to identify operators in main funds and determine their cost, right? And the cost of stabilizing their positions. Now I am going to test you. What do we look to determine if there are main funds involved? Please type your answers in the comment section. So we have Sophia here. It's very good to see Sophia. Hi, I hope you are doing really well. You have submitted the assignment to our assistant, and I have analyzed it very deeply. Next, we will talk about how do we determine the cost of main funds position building. Again, type your answers in the comment section. I see everyone in the comment section is doing well. Now, just have a look. most of the beginners, for the beginners we see, for the short term traders, all have written the correct answer. That means a very good that each and every one of you is doing really well and able to grasp the yesterday's session, and now they are able to answer how to identify the operators play into it. So now let's dive into today's main topic: how to establish position at bottom in a covert manner, right? So Sophia, we have from Sophia. We have a question. Did you not have a holiday today for Christmas? No, Sophia, we didn't have any holiday on the day of Christmas. While everyone is celebrating, we are working here to make you more financially well, to enhance your knowledge. We are working very hard even on a Christmas. We will be enjoying our Christmas, don't worry. In the night time, in the evening time, it's ours, right? But in the morning time, we are teaching you through all the guidance and making you a smart investors, because each and everything comes to a place called money. The more money you'll have, will be able to enjoy our festivals very well, right? And we are here to help you understand how to make money. So just be assured, Christmas is just a thing here, and we are here to help you and guide you through making money. So Merry Christmas, Sophia. We will be celebrating our Christmas in the evening time, but now let's focus on the money making machine in the stock market, and we will be covering the how to establish position at the bottom in a covert manner. So can anyone tell me how you can establish the position at the bottom in a covert manner? Type covert entry, right? Type covert entry. What do you mean by covert entry? It's establishing positions at the bottom in a covert manner, right? Yesterday we discussed the biggest difference between main funds and retail investor, which is continuity. So let me just take you through these slides where we can understand the continuity in it, right? So just have a look. This is the slide where we can see the presence of continuity and non-continuity. So for just look at it, for the big bullish line, right? For the big bullish line, just I will make a arrow so that you are able to understand. So for this line and this line, for 1 and 2, this can be created by retailer as well, right? The big bullish line and the big bullish line daily limit can be created by retailers. Am I correct? Right? The short term momentum in a stock can be created by the retailers, right? And now look, this point 3, 4 and 5. So here is, we can see the point 3 continuous big positive lines. It's growing steadily. Thirdly, we have continuous daily limits, it's going steadily. And fourth, we have continuous rise, which is going steadily. So just look at this three, right? Just look at these three patterns. So these three patterns shows a continuity, right? It shows the continuity in a stock. It is increasing in a continuous manner. And just look at it, we also have its name: continuous daily limit, continuous big positive line, and continuous rise. So this, when the stock price increases in a continuous manner with a good volume, then we can identify the presence of main funds. Yes, you are correct, right? You can identify the presence of main funds. Type continuity on your screen. In the previous session, we mentioned that positive candlestick indicate the activity of main force. So what are the activities? We can just look at here. These are the activities of main funds. So these are the activities of main funds today. But today it's a very different session. We have already talked about the continuity, the presence of main funds through the candlestick pattern. Today I will mainly teach you how leading institutions such as securities firm and fund companies operate in creating leading stocks, right? Have you know that I have worked a lot in securities market, and having worked in securities industries, I have a clear understanding how security institutions conduct trading and how listed companies use news to establish position I will share these insights with you. So just be ready. I hope you are covering all of the things with pen and paper on your notebook, right? And getting more of insight. Next, I will show you how to leverage the information gap about the main force to establish position covertly. Type small positive candlestick covert entry using small positive candlesticks to establish position covertly on your screens. Everyone, please type it now. Let's move into the individual stock demonstration. Right. In terms of small positive candlestick entry, indicate one of the main fund performance, then select, we have to go to selection of one individual stock. So just have a look. We will go to the trading view platform, okay, and we will search which stocks do you want me to cover, guys, which stocks. So just let me go through the stocks here. So I will go through the stock Greatex Corporate Services Limited. So just have a look, Greatex Corporate Services Limited, which is listed. I will go to the Greatex Corporate Services Limited, which is listed in BSE. So just have a look for the greatest stock, right? So for this stock, Greatex, just have a look. I will reduce my size to much lower because you will be able to see screen more clearly. I will make it more concise so that you aren't focusing on me. You are focusing on chat. So yesterday we have talked about the presence of main funds, right? And today we will talk about the presence of what we'll do. Today we'll talk about the presence of the today we'll talk about how the covered entry is made. So after while when explaining continuity or candlestick pattern, we have shown the slides, the candlestick, and it explains in a simple and relevant manner. Now just have a look, right, what this course will be providing, right? How this candlestick can benefit to the consumer. Like this course helps you to interpret market movements and make informed decisions just like big players in the market. So you can be rest assured whatever course we are providing, whatever knowledge we are imparting will be able to help to you to interpret market movement, make informed decisions just like the big players are doing in the market. So get ready for it. You will be just following the operators and making money. So why it is important to follow the main fund, right? We track major main funds instead of retail investor because big funds have the resources, research team, and information to make strategic moves. If we align our strategies with them, with theirs, we can potentially profit too. So just remember, we are here only to make profit, right? Make profit out of the money. So what do? We don't follow the retailers, we follow the main funds, operators in the market. Why? Because they have the resource, they have the research and first hand information from which they can make the strategic move, right? So we are coming to the stock Grexter Limited, right? Grexter Limited, just have a look, Grexter Limited in it. So can you find the presence of main funds here? Just have a look in Grexter Limited. Can you find the presence of main funds? Yes. Right. We can find the presence of main funds at this point and just look at it. At here also we can see the stock is rising, but just have a look. Main funds have started making their position at this level, right? Main funds have started making their position at this level. So main fund have started making position at this level at what price? At the price. Just look at the level, guys. at the price of, here main firm started making position when the price was around 190, right? Just look, the main firm started making position here, so we'll just make that line at a horizontal to make you a clear understanding. So at this position, main funds have started making a line position. So at point of 190, the main fund started making position. We can see the volumes appearing, right? The volumes appearing here. We have talked about the volumes and the main funds entering the player, but before that, just look at it. From at this point to this point, there was a covert entry of main fund. Just have a look, there was a covert entry of main fund where they were making a position very small, right? So they were making a position very small from this to this point. Just have a look. From this point to this point, they were making a covert entry. Now just have a look on it. This is the graph we need. So for this point to sustain, oh, just have a look. I will just make sure you are getting the points. So from this point, just look at it, from this to this point, right? I am just making the point for the covert entry. We can see the covert entry has been made for the main funds. Covert entry has been made from this main funds where there is a small candlestick appearing. Can you have a look on it, guys? I guess most of you are getting it right now. So just have a look, there is a covert entry been made and the stock price is pushed because there is a presence of main funds, and the main funds have started increasing in a good number, right? Main funds started increasing in a good number, and here they are making another position. So we have our another entry for the main funds at this. Is it we are making a main funds are making an entry here? No, they are not making an entry here. So just line this up. Okay, first we will line this point where the main funds have put their entry. So this is the position where main funds have made their entry and most of their profit. Just have a look, right? So this is the point where main funds have made their entry. Here the covert entry was made by the operators, and now look at this point, at this stage, this is the price of the main fund, and just look at it, they have entered at 190, and here at 400, around the price of 400, again a bullish momentum has been shown. But just have a look, we don't have the volumes, which we require in, main fund. But just have a look, the stock price is increasing. The stock price, who is forcing the stock price to increase? Can anyone tell me who is forcing the stock price to increase? Any one of you? So it's a big retail investor or a institution who is pushing the price. Can anyone give me the idea who is pushing the price from point to, from 200 to 400, right? It has increased from 400 to 600. Just have a look, from this point 370, the stock price have increased to 500. So this is the point where many of the investors have entered. So what this investor we can call, we cannot call it as some operators, right? But there should be other investors also. We cannot call it a retail investor because they are the big bulls, big investors who are investing their money and making the position, right? So we also term a right positioning, right? What do you mean by right positioning? Right positioning refers to the insider information that give main funds and institution an advantage. It gives a significant advantage to them, then these entities often acquire first-hand information, enabling them to act before the broader market reacts. So you can see in this stock here, the covert entry is been made, right? Covert entry has been made, and then the market was suddenly pushed. So the sequence of information flow starts with the main fund who gets in insider news first. Following that, the listed company use this information for their strategies. Once the main fund establish their positions, they often influence the market, leading retailers to be washed out. So just have a look what they will do. They will wash out retailers at what point? So they will wash out retailers once they have made the position and the stock has increased. This will be the wash out period for retailers, where they will create some sense of bad news. They will create a negative sentiment where the retailers will start selling the stock from this to this point. So we'll just make this point to make you understand this is the wash out period for the retailers. So right, what is this? This is the wash out period from point A to B. I will just make a good point to make you more clear about. From just point A to B, what we do, we have a wash out period. This is called wash out period, where retailers get out. Wash out of retailers. So here we get the point from A to B. At this point, when the stock was started consolidating, this is the washout period where most of the retailers will be making an exit. And then the big players, the big investors will come into the flow and they will push the market high. So they will push the market high and they will keep on increasing the prices, right? So you can see the operator have a price at this level at 190, and at 5 to 600 they are making the profit of 3x. Usually operator have a profit range of 3 to 5x only, so they may have reached the target at this level and they may have exited. Just look at this level, right? We will make a horizontal, and so at this level, so talking about this level, they may have entered. They have made, operators made 3x profit. Operators have already made 3x gain from 190, where they have started making position. Just look at this position. Operator have started making the position. The covert entry was made from at around 200 to 190 level, and then here we can see when the stock price reached at 620, they were able to make a gain of 3x. Whereas where the institutions or the big players, where they have entered at price 300, they are able to make a profit of, whereas we'll write, whereas big investors are making gain of 2x here. Whereas if we go by the market sentiments, retailer will enter at this point and reach till this point, right? So they will make a position of 10 to 15%. And lastly, what they will do, lastly, retailers will follow the market sentiment and gain only 15 to 20%. Retailers only make 10 to 20%, right? 10 to 20% gain. Bus. So just look who are making most of the money. Operators are making most of the money here in the market. If you go by the operators which are already making 3x gain from 190 and they are making exit at on around 600, just look, the consolidation price is consolidation is going on between the level of 5 to 600 where they are making an exit. Retailers can also make profit here. Once they enter here, they can make 10 to 20% of profit while following the market sentiment and market news, right? Now lastly, the retailer, whereas the big investors which have entered here are making gains in the stock and pushing the stock. So here big investors and operators who have made positions at below level, they are both pushing the stock and exiting the position at this level, at this consolidation. So it's very important to see the levels, the volumes in a like piled up in a continuous basis, then only we will be able to understand the retailers work, right, the operators work. In summary, if we should, for us, the focus should be on second range big customer. By following their short term movement, we can capitalize on market sentiment and aim for profits in the range of 5 to 600. So for us, we can profit from this range to this range. We should capitalize on the second movement if you are not able to take the benefit of this momentum and volume. Now, look, in summary, the main funds act for the long term. If you see, they act for the long term, while big customer can drive short term actions. Our strategy is to identify and align with the second range, right? So let's break down how different players target profits at various market levels. So we can see the main funds have all got the 3x of return, the big investors are getting a 2x of return, and the retailers operate with just a small profit of 10 to 20%, right? We have seen the main funds usually target for 3 to 5x of the return, and they are getting it here at, they are entering at position 190 and they are exiting at 600 level, so they are easily making their long term holding and expected gains on it. So big investors, right, where have entered at 300 and they are making exit at 600, so they are making a 2x of their profit. Their strategies align with the significant market movements, aiming for substantial but slightly shorter term profit compared to the main funds. Now retailers positions usually enter much late in the cycle. For instance, we can see retailers entering at 500 level and then it reaches to 600 level, right? Just have a look. Retailers have entered at this position, they are making a profit of 15 to 20% of profit only. This because they have leveraging short-term market sentiment and small bullish candles to guide their decision. This small bullistic candle signals an entry opportunity for retailers. Just have a look. Going to this level, we can signals a buy call and make profit till here, right? 10 to 20%. By riding the wave of market emotion, retailers can aim for modest profit margin of around 10 to 20% easily. So, what is the key takeaway from all of the things which we have understood? The key takeaway, right, the key takeaway is here to understand where you stand in the market cycle. The main funds aim to invest for a massive return like 3x and 5x. Big investors aim to double their money in just short term, right? And retailers try to capitalize short term emotions for smaller gains. Recognizing these dynamics help you align with your strategy with realistic targets. Now let's have, okay, now let's introduce another stock, TRF Limited. Now let's analyze another stock to understand the dynamics of main funds and big players in the market. Initially, main fund established their position quietly at lower levels. Once they have secured their holding, they push the market as the prices rises. They wash out retailers, allowing a smoother climb. Market climbs. At the top, the price reaches the expected price, which we have seen, and the main funds exit the market. We have seen in this case also, main funds started making entry at this level and they have washed out the retailers at this point from A to B, and then again big investor took the position and they have exited at this position. Both the retailers and big players have exited this position and retailers are trapped, right? Most of the retailers will be trapped at this position when the stock is consolidating. So this is the position we can see for it. Now let's have a look for another TRF Limited stock, right? But before that, we will go to the presentation and have a look on presentation what can be done. So we will understand the difference between the main funds and the difference between the main funds and the retail investor. So just have a look on difference between the main funds and retail investor. So here we can see the difference between main funds and retail investors. So just have a look. For retail investors, there is a personal research. They don't usually do research. There is a personal biasness which comes from the retail investors, and they invest their money accordingly. For main force, they have a large research team. Just have a look. They have a large research team, which is a very good indication to enter into the market. For talking about information, there is no information. So just look at the information which there is no information for the retail investors for which they can get in the market. But for the main force, we see they have the information, right? They have the information to enter into the market, right? And when the stock starts booming, when the news effects come into the stock price, they will be able to exit into that. So now talking about funds, right? Talking about funds, retail investors have small funds, right? And big main force have a big fund in it. So usually the main funds or the operators push the market because they have a big fund. Talking about the continuity, just look at what we were talking about, the continuity, right? From the beginning we were talking about the continuity. For the retail investors, it's very weak. For retail investors, it's very weak. The continuity remains at a 1 or 2 day. But for the main force, the operators, it's very powerful and it's remain continuous. So it's remain continuous. For weak position, retailers only make a one candlestick, but for powerful main force, it makes a many candlestick in a bullish pattern, and they are able to drive the market to much a high low. So what pushes the market? The funding drive, right? Funding drives the market. Favorable policies promote the market and push the stock to a greater height. So now just have a look, the three elements of the stock, right? We are talking about the three elements of the stock. What are those three elements? So just have a look on it. In trading, we focus on crucial three factors. First, right? First, the price, right? First, the price, the most critical factor to determine entry and exit level. So just have a look on the trading view platform. What we focus? First, we focus on the price level. So this is the price level we are seeing at 190, at 100. So just we will remove that indicators, right, to make you more clear. So if you are removing the volume, we will only look at the price. So the operators are entering, the main funds are entering at 180 and making a profit of 616. Talking about second, we have a volume. So let's have an indicator volume here. So second, we look for the volume, right? Second, we look for the volume. So these are the levels of volume we can see here. So these are the level of volumes. Just have a look. These are the levels of volume we can see. So secondly, we consider volume, right? Second, we consider volume, and third, we consider time. So what are the factors which we can see? So we look at the price, which is one of the most important thing, the most critical factor to determine the entry and exit level. Secondly, we have a volume. Just look at it. We have a volume, right? Secondly, we have a volume for it, where we will be able to see to confirm the strength of price movement. Thirdly, we have a time. The timing of entry and exit is essential for maximizing profit. So this is the most important thing. The timing of entry and exit is essential for maximizing profit. Now just have a look on it. We have talked about price, which plays a very important role. Price has the highest importance, so just we will mark at a 3 point. Volume has a second importance, so just 2, and time is the least important. So where you are making an entry, time, it's not that important. Now talking about the entry, we have seen making an entry, right? So this is a left side trading selling point. So left side buying point is this, from here to here. It is a left side buying point. So this is a left side buying point. From here, we'll just make it A, to you are able to understand, and here too, it will be from point A to B, where the left side trading buying point, and it's the lowest point we can see. But we are not entering stocks at this level. We are waiting for the stock to come at this point, right? And then we will be making an entry. Just look at it. We have a second left trading selling point. So this is the second left trading point, right? So this is the second left trading point, and here we have a first. So here we reaches the highest point of the price of the stock, which after right side buying trading point. So this is a right side buying trading point, and it's a right side trading selling point. Once the stock reaches at this level, it's a buying point, and once the stock reaches at this level, it is a very high risk to enter that stock. It is advisable to entry, it is advisable to exit that stock, right? So now we have to see left side buying price, low price and low success rate. So whenever we buy at the left side of it, right, it has a, whenever we buy at this price, we have a low price and low success rate, and at right side trading buying point, we have a high price but a high success rate too. So we have a high success rate too at this point, right? So I hope you got all of the points too of me. So just look at it at the location. We can see candlestick is appearing, right? Candlestick is appearing at this level, and again there has been continuous rise on it. So we have to see the W is been made here. The W is been made here, and when the stock price keeps on increasing at a continuous basis, the candlestick is been made on a continuous basis, the stock price will keep increasing, and we can see the sign of main funds pushing the market at a higher price. Now what are the prerequisites for the shipment, right? What are the prerequisites for the shipment? So just have a look. The main force has entered the market, right? The main force have entered the market. Secondly, the market has risen, the main force has made a profit, then there has been clear upward trend. There has been a clear upward trend. So just we will take an example of GSCL only. Just have a look. The main funds are entering the market, right? The main funds are entering the market. So the main funds are entered the market. Secondly, the market has risen. So just have a look. The market has risen, right? So when main funds enter, the market has risen, and then there is a washout period for retailers. So thirdly, we have the main force has made a profit. There has been a clear upward trend. So after that, we can see there was a clear upward trend where the main funds have made a profit here. So at 4, the main funds have made a profit and they will exit from the market. And here's how the profit has come into reality for the operators. So we have discussed about main funds entering the market, how they covert their positions, and how they make money, right? How they make money in the market. On the slide, we have also observed the W pattern on the chart. The left of the W represents the accumulation phase by the main funds. The bottom of the W is where retailers often panic and exit. The right side of the W, just have a look. I will make you more clear on it, right? So just have a look on it. On the slide, we can observe that W pattern. So the left side of the W, look at this side. So left side of the W is where the main funds have started accumulation, and the bottom of the W is where retailers often panic and exit. The right of the W, we saw the market being pushed up, driven by volume and sentiment. This is where we can strategically make our entry and ride the wave of profit. So we have to enter for it. Here we can start making profit. We can ride the wave and make profit. So this is the sign where we can go and ride the wave of profit. And once we get at this point, we should wait. And once it comes at this level, we should be start selling our stock. So right buying point has a high price and a high success rate too, but we shouldn't enter our stock at low price and low success rate. So I hope everyone has got the point of a W where we should be making an entry and where we should be exiting our position. So for all of you, I have a task, right? I have a task for you. So tomorrow, each and everyone is required to identify the covert entry in 3 of their stocks, right? And submit it to my assignments, and then I will identify you are correct or not, and I will let you know. For the homework, just remember you need to identify all the patterns, all the volumes, the W pattern on the chart, and how the covert entry has been made and how you can justify it. So just make sure you are making an assignment and submitting it to my assignment.